want to sit with him. You're going to have an office with your darn window. Charlie's going to get the coldest office and the one furthest away so they can't see the mess on his desk. Well, he's going to get his own bathroom too, by the way. We're going to keep that guy off into the corner. Get him a red stapler. You've seen that movie, right? Come on! What's it called? Office Space? Office Space. That's a classic. Come on, man. I feel old. Hey, welcome to the Closing Beat, everybody. Happy Thursday. How we doing out there? Hope you're having a good day. All is well with you. Welcome to the Closing Beat. It's a fancy name that we give to reference our name, but also reference, the stock market and everything, and kind of steal from those guys on TV a little bit, but keeping our own thing going there. Hey, we're going to talk about the stock market here today. We got lots to cover because the markets go down. What's that all about? So we'll cover that and dive into it. If you're thinking about joining us here at Jazz, do appreciate it. We've got a little waiting list going on, going through just inviting people little by little, working out some of the kinks of everything we've been building over the last couple months. And so if you don't know, we build our own portfolios here. We manage our own portfolios, so there's no expense ratios, but we also build our own software as well. So as we find things that you guys are getting stuck on or maybe prefer to see somewhere, we can just change it, right? We don't rely on other companies to do that, and we love it. Means we're a little bit smaller, of course, but so you get the personal attention. All right, let's get started here. Hey, what frustrated me today was the headline of the day was that people were now concerned about the economy and maybe the new virus and all this stuff, and that's why the markets fell. Well, if you've been watching for a while, that has nothing to do with it. It's the mechanics of the stock market. If you understand the mechanics, which I only saw one person actually mention this here today on TV, you have these stocks that I've been showing you here. You got Apple, Microsoft, Google or Alphabet, and Amazon. They've all been moving higher here. These four stocks make up about 20% of the S&P, and I'll tell you what, if you want to throw Facebook in there, you're guaranteed to be over 20%. They've all been moving higher. They've been the ones moving higher, and we just said it yesterday. What happens if those stocks decide they want to take a break and they want to fall? That's going to drag the market down. That's exactly what happened today, almost like perfect. You got Microsoft down about 1% on the day. You got Apple down on the day, although it did recover pretty nicely. I'll give it that. Apple being the most extended it's ever actually been. We'll come back to that in a second. Almost as extended as it's ever been. Did I mention Microsoft? Yeah, we mentioned Microsoft already, and of course Alphabet in there as well. You could throw in Facebook if you'd like, and even that one was down. So that much weight on the stock market for the day means that every other sector has to be moving higher. And as you'll see in a second, we've been showing that every other sector has actually been weaker. All those sectors have started moving over, industrials, healthcare, all of it. They've all been pulling back. So unless those were already strong and these stocks took a break, you have a recipe for the stock market pulling back and continuing to pull back if that's the case. So we'll cover that. So when they say that the stock market's lower because of concerns that just poof came out of nowhere, no, it's probably a lot of profit taking going into some of these big stocks that have had a really great move. All right, if we go over to the S&P 500, I'll start there with you here today. Apple pulled back after a really, really big run. It was actually, you would call it 3 standard deviations away from its 50-period moving average there. That is the 41st most extended that Apple has ever been, right here. That's the 41st one. And remember, it's not like a new company. They've been around for a long time. So if you take the other 40 times, it took 2.2 days, just over 2.2 days, for it to start falling. So we're ahead of schedule here. If Apple falls tomorrow, you go, well, that's what happens. When it gets that extended, it doesn't like to be up there. People don't find themselves attracted to that stock at the moment, and therefore it pulls back. So if you're looking for a pullback on that one, it's great. Actually, if you look over 1 week, we take all those 40 times, and we look 1 week later to see Apple was down. If we look 1 month later, Apple was down. In fact, it was down 1.14% on average there. If we look 3 months later, when Apple does something like this, one of these rare 40-time type positions here, it's down 4.5%, 4.52 to be exact. So the forward performance is affected by how much Apple has found itself extended here in the short term there. Now, if we look through the rest of the S&P today, you're going to find rails. Boy, they got hit hard today. So rails, Kansas City Southern, Norfolk Southern, Kansas City and what was the other one? CSX, right there. Union Pacific also lower, every one of them. They were your biggest losers in the S&P here today because President Biden is going to apparently do some kind of executive order to make it more competitive. I don't know if anybody's ever told him, but we use trucks and stuff too. So I don't know that the rails were already complaining that things were not that competitive. Kind of an advanced society now, but nonetheless, he's going to make it so that it has to be more competitive. So essentially, all four of those guys have to work better together and be more competitive, open up lines and things, because each one of them has their own territory. But really? I mean, did we need that? Is that something we really should have spent our day on? I don't know. If you're looking around the S&P 500, you're going to find that home builders also pulled back a little bit here as well. Largely started with the Dr. Horton pull. What did they get, a downgrade? I believe Dr. Horton got a downgrade, and these were already weak to start. When you're looking in the home builders, we'll do this in our sector breakdown, but they were already selling off. Look, they're pulling back already over the last month and a half or so. It's just part of what's happening right now, right? So everything besides those 5 names had been pulling back, and maybe throw in NVIDIA in there as well. All right, we go over to the Nasdaq here. A quarter of the day's losses actually come because of Apple. Just Apple, which would have been more and was more earlier in the day. But Apple recovered a little bit. So 1/4 of the losses gives you an idea of how much weight that actually has. If you add in NVIDIA, which pulled back about 2 1/3% today, then almost half the day's losses in the Nasdaq are attributed to just those 2 stocks, which have had amazing runs. So if half of the day's losses can happen because of those 2 stocks, what happens if they keep going lower? Wouldn't they drag the market lower? Sure, unless everything else decides it's going to move higher. So everything has to work together for everything to move higher there. That's just those 2 names there. And look, the Nasdaq it feels like it's just trying to be in pullback mode here, reluctantly, but it just kind of feels like it's in pullback mode, and that's no problem there. If we look at the Russell here, darn near went from the best performing index for the year almost to the worst performing index. Would have had to fall in about another 0.5% to get it there. If you're looking inside there, you're looking for pullback stocks. There's a lot of great things to look at here. I'll point out some of the ones that are more obvious. Are going to be your home builders. Beazer Homes in the Russell 2000, breaking below the 200-day moving average there. You got MI Homes, MHO is a ticker symbol, a little bit stronger, holding up just a little bit better, but still in pullback mode. Weight Watchers, or WW, more of a sloppy pullback with likely some room to go on that one. Avis, now we're going to stay with the reopening economy, getting back to life kind of thing. This you could attribute a little bit to the what do they call it? The Delta variant there, the new COVID, if you will. So that's attributed to that just a little bit, but in pullback mode there. And Duluth, you've seen the commercials. You know the Duluth Trading Company there, the underwear and all that stuff, pulling back. But this one not weak. This one just pulling back after a bit of a breakout on top of some support. So maybe another day down on that one could make that one attractive if you're looking for ideas inside the Russell 2000. As far as the Dow goes, we're just sitting up here chopping around at highs, very much normal for the summertime. I have no good or bad to say here. It is the worst performing index for the year, I believe. It is just ever so worse than the Russell 2000. And so if you're playing along, you want to guess where you think the Dow is going to close. We give you $100 if you're the closest without going over. And Cody's going to share who's in the lead.
We have 5 new names on the list today. A lot of movement today. After the down day, we got Peter, Joseph, Elena, Jarek, and Kimberly in our top 5. A big move, by the way. There's a lot of names in between yesterday and today. If you want to play, you can go to dohstr8.com/guess the Dow. It's actually in the lower third down there, getting fancy. And then real quick, I was going to berate you for your horrible taste in movies. In Office Space, came out in 1999, probably why I haven't seen it. That's an 80% on Rotten Tomatoes. So
yeah,
maybe I'll check it out.
Oh, that's a staple. Jennifer Aniston too. That was like her first.
Jennifer Aniston, Ron Livingston, Gary Cole.
Yeah,
a lot of good names.
Yeah. A good movie. Good movie, by the way. If you happen to be wanting to watch a movie here lately, come on, you guys have seen it. Our audience has had to have seen that movie. That don't tell me. I'm not old, right? I mean, I'm not that old, I guess. But anyways, that's what you have there. Hope you play along. It's just a little fun summertime game that we're doing. Let's move on to the sectors. There is not much new for me to say here. Everything is going to be like a broken record. Financials, they're already pulling back, right? Today a little bit worse because you had that 10-year. If you're looking at rates, the rapid increase in bonds here, which means the rapid decline in interest rates, largely causing that one there. But if you're looking inside the XLF, which includes really all the big names. You're going to find that a lot of them are the insurers, right? So Principal, which is not really an insurer, but falls into somewhat of that category. Principal down on the day, one of your bigger losers. MetLife, MET, ticker symbol there, already weak. Look, every chart I'm about to show you, already weak. So make sense of that. How is the stock market going higher when everything is already falling? These are S&P stocks already falling there. Prudential pulling back, hopefully would continue to be a little bit more than that. And again, largely due to rates today, or at least that's what we would attribute to the decline today. Looking over at industrials, already weak. It refuses to go higher, but the stock market says it's going to go higher today. It was a broad sell-off today, but that's largely today due to your rails, Norfolk Southern and the like. We've already mentioned that, but largely the decline was attributed to those names. The XLI has now given back about half of its last 3-month gains, and it's just getting started, it kind of looks like there. So obviously that one's got to make the list as well. Not a sector, but if you look at transports, already moving lower. Home builders, already moving lower. Metals and mining, already moving lower. Regional banks, you can understand a little bit more weakness there, so I won't pick on them. Basic materials, a little bit lower. Now, these guys have had a good move. Your Albemarle, Nucor, Newmont, all of these had good moves, so normal pullbacks there, nothing to be worried about. Communication services and tech, those are your only sectors, of course, because of the names that I've mentioned there. Healthcare starting to pull back. Energy already moving lower. Retail already moving lower. Consumer staples already moving lower. Utilities, you can go through all of them. Go through every sector. They're already moving lower. It only takes a second to look through it. REITs, I'm going to point out a few on our new highs list here. They're standing out as starting to strengthen again. They were moving lower, but they're almost back to highs. That's kind of a space you want to look right now if you're looking for new dividend stocks, maybe some relative strength in there if that's something you're looking for. So real quick sector breakdown and a lot of what we've already seen. If you go to the new highs and lows for the day, you got 21 new highs there. Many of them did finish lower on the day, but I want to point out a couple that stand out. Costco hitting new highs and staying strong. You got Target hitting new highs and also staying strong. So retail space, that gives you a clue. Maybe you want to go look over in that category there. Going back to REITs here for a second, right over there. You got Avalon Bay, nifty little breakout there, and also stronger than the sector, so that's important there. REITs in general, just kind of enjoying that small, that drop in interest rates there, not small, the quick drop in interest rates. You've also got Crown Castle, that's a REIT showing relative strength, money moving over into that area, so you can feel it, a little bit of sector rotation there. And UDR, also a REIT. I just wanted to put a few of those on the list because not everything is as, pull backing and looking at the way I'm kind of describing it there. So I want to have a place for you guys to go look if you're looking for new ideas. Stocks in the news. All right. You got Alphabet, G-O-O-G or G-O-O-G-L if you're interested in looking through that stuff there. 38 states filed a lawsuit against Google. New York State, I believe, is leading it there. Google says this is completely meritless. It's just a waste of our time. They really downplayed the suit there, but they have to kind of, you got to do what you got to do. DraftKings. DKNG is being sued by Game. G-A-M-E is the ticker symbol. Shanda, I believe this is the name of the company. Shanda. If you would know them probably from WinView, right? So is that something you're familiar with, WinView? No. Well, they're the guys that made the technology that is, you know how you say, do you think the next play will result in a touchdown? Do you think that so-and-so will score on the next rebound or something like that? Now do you know? Well, apparently DraftKings stole a lot of their technology, and so they are suing them for patent infringement. And so that's why you see DraftKings a little bit lower here today. What else do we have here? Goldman Sachs throwing a nod to gold instead of Bitcoin. Goldman Sachs is saying that Bitcoin cannot compete with gold, which I agree with, until volatility drops. And that's one of those things I keep pointing out. It's great to see volatility a little bit quieter here for Bitcoin lately, but you can't compete as a hedge. You can't compete until you get that crushed volatility. And we don't see that in Bitcoin because everybody and their mother is excited about this. Speaking of Bitcoin, let's take a look at a few things here that I forgot to share with you because I do that. People less interested in some of what's been exciting over the last couple months or so. We put up together a bunch of different Google searches here. We span back 5 years just to show you the difference here. Stock trading, people searching for stock trading, obviously severely dropping there. Buy stocks, we looked up a bunch of terms here, has severely dropped off of a cliff. Less people interested in the stock market because they're going back to work. That's probably why. If you look at the meme stocks, GME and AMC, they had their moment in the sun. They are almost back to pre-COVID levels. Well, actually, GME is. AMC is always a little bit higher because people are looking up movies, so that's not really a fair analogy there. But looking at Bitcoin and crypto in general, less interested. Why? Because it's quiet right now. It's not exciting. It's not moving higher. It's not rapidly increasing every single day. So the level of people interested in Coinbase, crypto, Bitcoin in general, all the different coin names or stable coins in particular, also falling off of a cliff, looking much weaker. Where's all the action going? Vacation. Vacation and leisure. So if you're looking for stocks out there, we've hit a new high in the search terms for hotel, which is also seasonal in a way, but we've already eclipsed what is typically the seasonal high for hotels out there. People very interested in getting out there and vacationing a little bit, if you can even find a hotel. If we look at new boat versus used boat, I've shared this in the past with clients in our Notes from Jazz email there. Obviously, back to high, almost back to highs, very strong. So the action for Marine Max and names like that, you may notice that those stocks get pullbacks that are buyable because people are still looking to do that. That's naturally going to be helpful for suppliers and equipment manufacturers, repairs and things like that, and of course accessories and things that you would buy. So I thought that was rather interesting and just something to share with you. What's going on? All the attention's moving elsewhere for the moment. All right, if you look at Visa, they're going to partner with, speaking of crypto, they're going to partner with Coinbase on digital currencies because they've got over $1 billion being spent on their cards using crypto. So in particular, Bitcoin. So rather interesting there. They are essentially doubling up their efforts to be a part of that. And they have been for some time there. Remember yesterday they said that they saw their card spending in Bitcoin top over $1 billion. So rather fascinating there that people are starting to use that as a currency. It's a good thing. Tesla up 1.25% today. Remember, analysts were all pretty negative on Tesla because of all the recalls in China. Well, they posted sales for China's and found out that actually sales were very strong. They also came out with a lower cost Model Y, I believe it was, if I remember right. Model Y. So got a couple upgrades today and the stock moved higher as well. I'll let the stream catch up for a second because, well, we have Intuit paying out 59 cents and UDR, the REIT we just talked about, paying out 36 cents. Other than that, I think we've about wrapped it up there. By the way, Nancy Pelosi killing it on her Amazon trade, right? No, I'm sorry. It's not her trade. It's her husband's trade there. She's now, if she hadn't sold yet, she's over $10 million in profit since it broke out because she knew the news of what was going to happen before we did. You think that's fair, Cody? It's something. You don't have an opinion on that? You got no opinion on that lady. Man. Like, I'm not too big on politics, right? I just want to see everybody do better and, let's do that thing. But the fact that she gets, I don't care who it is, the fact that they get away with that, man, that bothers me. We almost made some progress on that a couple years back. 60 Minutes did an episode, got everybody all fired up and everything, and then it just kind of went away. How in the world is that allowed to happen there? And it just boggles me. I can't believe that. Like, makes you want to go into politics, right? If that's allowed, I'll go into politics, help everybody out, make sure everything goes well, but I'm going to make a few trades. She's worth over $100 million. Nothing. She deserves every penny. Well, that's a big lie. Wow. Yeah, right. All right, so that one's there. And also, sadly, the CDC, I guess, I just see this pop up here. They're going to be, they're suggesting that maybe you start wearing masks again, that this new, one form or another of the virus, likely going to be around for 2 to 3 years, and especially the states with low vaccination rates should probably go back to wearing masks, so they say there. And I don't have a great way to invest. Maybe 3M, but they kind of got ripped off on the whole mask thing. But that's a bummer. We don't want to go backwards now. All right, let's see what questions you have there. See if I can help you guys out, and then we're going to wrap it up and get out of here. Yeah, Harry's got it right. I believe there's a group that follows her trades, right? Didn't you tell me that?
Yeah.
There's a...
It's like a TikTok thing. Everyone just follows her trades.
That makes sense. Yeah, so they look up Nancy. They know Nancy Pelosi's trades. You have to report all these, I think, within 30 days. And so they look up the trades. They just follow what she's doing. And I believe it's quite profitable. I mean, I can't imagine why it wouldn't be. Yeah. That's yeah, also, by the way, congratulations, Tampa Bay Lightning. That's all I've been seeing around here. Guess that's a little bit of a big deal for this area. Yeah, 2 in a row, right? Who knows the stats, huh? About that. What's sad is I didn't watch last night because I thought it was they were still 1 game away. Yeah, I'm a disappointment to the family. Yep. You want Disney to go to 177 by July 23rd. Time's ticking there. Time's a ticking there. At this point, if you own calls on it, which I believe you do if you're the same person there, if you own calls on it, you don't do anything anyways, right? Because you're at the point where it's sort of just sit back and wait. You only got a couple weeks to go. What are you're gonna get out? You're not gonna likely sell your calls. You're likely just gonna sit back and wait. And I hope it gets there for you. Yeah. Mm-hmm. Oh yeah. Do you not use EMAs? Nope, we don't. And I don't. It's not because I don't believe in them or anything. It's just the majority of people use simple moving averages, and so I only use them because I want to see what other people are looking at. I don't look at them because I believe something's going to happen. I look at them for what people will likely decide there. What do we got here? Samuel says thoughts on Marsh. MMC is the ticker symbol, and you have that at highs, I believe. Almost. Yeah, almost at highs there. So really strong. Obviously, it gets a relative strength point because if everything else is trying to pull back and has already started that, and this one is not, be one I'd be excited to hang on to. I wouldn't make any decisions on it myself at the moment. Yeah. Fewer babies cry when you wear masks. That's not a good thing. You're dissing yourself there, right? Yeah. Yeah, that's why I say, 3M had it for a little bit there, and actually stock's not doing bad, but when the deal was you had to wear those N95 masks, okay, that makes sense that these guys produce them. They did go crazy producing them and everything. But then we figured out, you just wear whatever you want. And that really hurt them. So it was not something I can say, oh man, if we have to go back to masks or something, let's track all these virus stats so we can see if we want to buy 3M. People just wear a cloth mask or whatever anyways. So that's unfortunate. Maybe like, and I don't know of any that are public, but like print media type companies that, they sell shirts and clothes and stuff and you can customize them, but now they have masks. No real good place to go there. Yeah. I love it, man. I actually like my mask. It's just kind of a clean, simple mask, but it's been nice not having to wear it, especially over the summer, because it gets a little hot here. I don't know if anybody's from Florida, but it gets a little toasty. All right. That's enough for me. I'm going to wrap it up there for the day. I appreciate you guys hanging out. I'm just confirming that I did cover everything I wanted to cover, because we put a lot into this show every day. It takes a lot for me to rattle off a bunch of stuff in just a few minutes, but I appreciate you guys hanging out. We will be back, we'll be back Monday to do this all over again, and good luck on Guess the Dow if you're playing along there. We will see you then.